Welcome to Farm Here Daily, a Field Forward podcast. I'm your host, David Geiger. Today on Farm Here Daily, the product of the USA label goes into effect soon. I chat with Kelli Klink of the Iowa Cattlemen's Association about what that involves. Then we take a look at markets with Reese Drenth of the Ground Level Dispatch. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Here Daily. And joining me on Farm Here Daily, we are going to have a conversation about the product of the USA. That's a new item that's going to be starting up here in a little bit, and we're going to learn more about that with Kelli Klink, the Director of Government Relations and Public Policy with the Iowa Cattlemen's Association. Thank you so much, Kelli, for joining us today. And let's just go over the product of the USA. Can you bring us up to speed, remind us what is it, and when is this supposed to get started?
Yeah, for sure. So the product of the USA label is a final ruling from the USDA that came out in the end of 2024 as they posted the ruling, and that way processors and packers had time to review the rules, all that went into that origin labeling process in order to be compliant. And so really what the rule is a label that clarifies for beef and pork the origin, as long as that product was born, raised, slaughtered, and processed in the United States. It is able to deem that product of USA or made in USA label.
All right. Initially off the bat, this reminds me of country of origin labeling, COOL, which was something that I believe the WTO ruled against. What makes this different from that rule?
Yeah, so the WTO disputes back in around 2013 through 2015 was due to the mandatory piece of that country of origin labeling.
Oh, so this is voluntary.
Correct. So the Product USA is completely voluntary, and that kind of allows for packers, processors to utilize that as more of a niche marketing tool for consumers who really want that USA label. They can really gear towards those folks. When we look at the disputes from prior years, from the 2002 Farm Bill, and then clarified in the 2008 Farm Bill, that mandatory country origin labeling went into effect. And shortly thereafter, it was ruled that it was discriminatory towards imports from Mexico and Canada, and unfairly treated those imports. And so that's where a lot of those disputes started, which allowed WTO's final ruling allowed those countries to place $1 billion of tariffs on the United States, which was going to be way more costly than it was to keep that mandatory labeling in place. And so that's where that mandatory labeling was repealed. And then that's where that brought us to today, to this voluntary label.
So the product of the USA has that, you mentioned those 4 ways to determine on if it is a product of the USA. Yep. You mentioned Canada and Mexico as well. And this is maybe more of a problem in the hog industry, but I know with Mexico specifically, there is a lot of transfer of cattle as well, where you will have cattle born in one country, raised in another. And that line to determine on which side it really should be called, a product of might be in question. Is this to say if there's any note of it was fed here but born in Mexico, or born here, fed in Mexico, that's just off the table, that cannot be labeled as a product of the USA?
So it kind of depends on the product. So if we're looking at single ingredient products, it has to be all for the born, raised, processed, and slaughtered in the United States. If you look at
which
the
would be something like cattle.
Correct. Yep. So that'd be like your muscle cuts, your steaks. And if you look at your multi-ingredients, that's going to be your grinds. So your ground beef, your ground pork, etc., which will have different pieces of the animal will be ground together. And so when you look at multi-ingredient products, I mean, that includes different ingredients. It has to be of the same domestic origin with processing and preparation in the United States. So there is that little bit of a clarification that gives that flexibility, because there is a lot of cattle being fed in Canada per se, but they're born, fed in Canada, but then processed and slaughtered here in the United States. So those muscle cuts from those animals would not be eligible. And then those grinds would be able to.
Okay, so muscle cuts. So your classic ribeye would not be a product of the USA, but because it's really hard to determine what exactly which cow contributed to ground beef, that would potentially be a contribution as long as it was manufactured in the US.
Yep. So has to meet those standards of that born and then that slaughtered and processed here in the United States.
Kelly, what's the impact of a label like this? What is this expected to do?
So a lot of this is going to create kind of that premium per se for product. There's a kind of gear toward buying US, buying local, buying US. And as long as you meet those requirements, you're able to deem that label. So consumers who are particularly conscious of that, who seek that, are going to be able to demand that, be able to seek that within grocery stores, within independent distributors, those sorts of things, and be able to pay likely a little bit extra due to the compliance costs that cost processors and packers on the backside to meet those requirements to even deem that label. This also goes to state claims. So if you want to say Iowa specific, if you want to put born raised process in Iowa, it has to meet all those same requirements just within the state. So it even is able to be brought down on a local level to support that as well. So it's kind of a way to gear toward that local, that state, and then your US products.
Was this something that was in demand from consumers? Why did this come about? As far as I understand, we are seeing potentially more opportunities of Brazilian beef or Argentinian beef coming to the United States. But for the most part, most of the beef that we consume is U.S. in origin. What was the purpose then for us to look for a label like this?
Yeah, so labelings have country of origin labeling has been around for a long time for a lot of different products. And what this kind of brought to was that clarity given the WTO disputes. And so a lot of people and a lot of people in the beef industry really want to make sure that US consumers know that this is US beef or if it's not. And so when we talk about imports, what we're really talking about is going into that lean trim that we import will go into those ground beef. And so that really comes down to where your price comes down a little bit when you talk about imports. The cattle here in the United States are grain finished. They're red meat, highly marbled product, which is not always the best when we're talking about creating a ground product. And so we need those lean trims to help balance out those product when we talk about a ground beef. And that creates those different levels of the 90-10, 80-20, et cetera. And so it kind of creates that differentiation. And so we don't necessarily create enough lean trim in the United States to create all the ground beef demand. And that's probably one of the highest demanded products of the beef industry is ground beef. And so that kind of allows the imports allow to meet us the demand of the beef products. And so long term, we'll likely still import product going forward, but then consumers, if they demand that label and want to see that label, there's going to be a shift toward that overall.
So, what does the verification process then look like? Because we set these standards of it has to be raised, slaughtered, manufactured, processed here in the United States for it to be considered a product of the USA and get that label. Who verifies that? How do we determine that what people put on that label is actually true?
Yeah, absolutely. So the USDA, Food and Safety and Inspection Service, will be the people to enforce and check on these labeling. And so there's a host of compliance paperwork as well as compliance checks that will go into effect starting January 1 at the packing plants and processing plants. USDA is already active in all of those plants across the United States. And so they will be able to be there on the ground, essentially double checking. There will have to be some segregation in lines in order to meet those labeling requirements. And so that will also be verification processes. And so as long as they meet all their paperwork, USDA gives them the green light they've done all their double checks, audits, et cetera, they'll be able to get that label. And so there's a pretty hefty amount of back work that is required from the packer processor to even be eligible for that label.
Are there any concerns of this adding onto a potentially already strained system? Because, as you mentioned, there's going to be some more legwork necessary, but also maybe some new systems that weren't in place, especially for the areas that are dealing with a lot of transfer with something like Canadian or Mexican cattle.
Yeah, I think there's always potential for that, especially as you get into full implementation of a new ruling. Um, there's always going to be some time to get up to speed with everything, and that's really why USDA released that in 2024. But as you know, we've seen this over the last year. Just the inventory hit some of its lowest lows, and so right now, I think a lot of packer processors are adjusting to the current inventory that we have in place right now, and so that kind of allows them to reach into that niche product, into that premium market. And so you may see some processors lean into that because they maybe have to have reduced line speeds or are not able to get the amount of cattle that they were previously. And so this allows them to reach into a little bit more of a premium to equal out those profits.
So, I think your expertise on this has been really great. I appreciate the view and the perspective you've given on this. What is the Iowa Cattlemen specific perspective? What is their opinion when it comes to this label and their expectations for it moving forward as a part of public policy?
Yeah, absolutely. So Iowa Cattlemen's obviously we touch regulatory issues as well. So we this year created a policy that will be ratified at our annual convention here in a couple weeks. That is supportive of the product of USA labeling as long as products meet that born, raised, slaughtered, and processed in the United States requirement. And given that it's a voluntary basis, it kind of allows for that differentiation of market. I will also add, of course, though, we do have a separate policy that's been in our books for quite some time, is if there is a way to have a WTO compliant mandatory country origin labeling, we would be interested in seeing how that could happen. But that's really why we created our Product of USA policy, was to be able to support this from the voluntary manner.
What seems to be the outlook on the political perspective, because this was something that started up in the Biden administration and then the Trump administration decided to allow it to continue as well and implement it as well.
Yeah, absolutely. From what I've heard and understand of the current administration, they also want U.S. products in the forefront. I know they say a lot of times is they want America first, and so that's one of the ways that USDA has continued to push forward with this, especially given what we learned from the first round of the mandatory country origin labeling was the cost side of this, and so that kind of alleviates some of the concerns that have on packer processors and brings those costs into more of a voluntary, more of who's willing to pay for those. And so the administration is very, I think, excited about going forward and implementing this ruling, given the opportunity that it provides back to the industry.
I believe you did mention at the start of this conversation on when we're going to start seeing it implemented. Uh, but when do you think we could potentially start seeing this label in our grocery stores?
Yeah, I mean, the packer processing industry has been aware of this for the last year. And so I'm sure a lot of them have been working on making plans, how they're going to differentiate their line speeds. Some of them have maybe already implemented this, but full compliance and full checks will start probably in that January 1 timeframe. And so we could probably start seeing them right away, depending on how soon a lot of those different processors were able to get their lines up to speed on how they want to move forward with integrating that label into their systems.
Kelli Klink is the Director of Government Relations and Public Policy. Before I let you go, is there anything on the horizon that you guys are also looking forward to in terms of how you are interacting with the leaders of the United States and specifically in cattle production and cattle production needs?
Yeah, absolutely. Iowa is a pretty unique cattle industry. And so we're always looking forward to boosting up the cattle industry. And so one of the ways we're focused on is bolstering opportunities for cattlemen in the state here itself, and across the United States, specifically on grazing capabilities. And so those are some of the focus areas. Those are an area that was not done in the One Big Beautiful Bill. And then with the extension of the Farm Bill, gives that time to work on improving those abilities and programs to really benefit the cattlemen to support the growth of the cattle industry, which I know the administration is very focused on. So focusing on ways to support that, specifically within conservation areas.
Kelli Klink, Director of Government Relations and Public Policy with the Iowa Cattlemen's Association. Kelli, thank you so much for joining us on Farm Here Daily.
Thank you.
This is Farm Here Daily. We will have more conversations on the way, but first, let's take a look at the marketplace. And there was some negative trade at the Friday market close. March corn 2.5 cents weaker, 4.44 3/4, with January soybeans 14 1/4 cents weaker, 11.05 1/4. Soybean meal in January $3.80 a ton in the red, $307.40. March wheat 4.5 cents down, 5.35 3/4, with hard red winter wheat in March 2 3/4 lower at 5.31 1/4. In the livestock market close for Friday, a bit more positive there. February live cattle up $3.15 a hundredweight, $227.15. January feeder cattle $2.47 higher at $339.05. February lean hogs 42 cents up at $82.27 a hundredweight. That is the Friday market close. This is Farm Here Daily. And joining me on Farm Here Daily, we are going to take a look at the marketplace here in December and what 2026 has in store for us. To do so, we have with us Reese Drenth of the Ground Level Dispatch. Reese, thanks again for joining us on Farm Here Daily. I hope you're doing well, and let's take a look at what is happening next year. We're starting into December. We've had some mixed trading already. What are your expectations? What are you watching for as we head into 2026?
Yeah, that's a great question, and thanks for having us as always. As far as what we're looking forward to next year, there's a couple things. The biggest opportunity we see today at this moment, we talked about it a little bit on your program, is new crop soybeans. So if you look at the soybean board, pretty much across all futures months, we've had anywhere from $1 to $1.75 rally realized here over the last couple weeks. And why that's important is, I think, anyway, from our estimations, we can put money in our pocket for new crop soybeans, depending on yields, of course, but assuming normal yields. So two things. First, if you just take new crop soybean futures at about 11.10, 11.15 per bushel, and you tack on a normal, we'll call it co-op basis, if we have some type of export program of like minus 50. Okay, you're looking at a cash price of around 1060 soybeans. 1060 soybeans times 70 bushel beans, that's roughly 700 to 750 dollars per acre worth of gross revenue. We believe, especially with some of the input markets and the, reductions in input usage at the farm level, especially with phosphates, that the soybean crop in general for your standard, Midwestern farmer probably can get in the ground around $500 to $600 an acre. So today, depending on your operation, depending on how your yields look, you can probably put in your pocket by forward selling just with November 2026 futures, $50 to $100 an acre. Now that is Chicago Board of Trade initiated profit, and we haven't seen that in some time, right? We saw a big rally, or we'll call it maybe a little rally, last winter that put some money in our pockets with good yields. But most of the profitability that we've seen over the last few years has not been Chicago Board of Trade driven, right? It's been yield driven. And the fact that now with this board rally that we've gotten because China's been buying beans has kind of gotten us to a point where we've seen Chicago Board of Trade give us a chance to put money in our pocket. We are believers that we should do that. So like with our growers, We have been encouraging them to make new crops 2026 soybean sales here at Current Futures, and working with whoever they'd like to market their grain with on different marketing solutions to maybe even bump that futures price up. So that's number one. There's margin in beans, and we think growers should take it in some capacity. Number two, on corn, boy, it's tough. I mean, corn economics do not look very good at this point. The Chicago Board of Trade has not given us the opportunity to make margin like it has in beans here over the last few weeks. So we're kind of in a holding pattern, and we're in a holding pattern to see mainly what happens with input prices. Now, we did write about this morning. We have started to see some cracks in the nitrogen market. So CF Industries, one of the larger nitrogen producers in this country, has actually taken their pricing down $20 a ton over the Midwest. Phosphate prices are lower. They're well off the summer highs. Potash is about the same, but potash is potash. It's just been pretty boring. So you've got a scenario here where, because of kind of the lack of demand and the lack of the enthusiasm at the farm gate of locking in high-priced inputs, they're kind of coming down. So short story long, there's money to be made in soybeans, we believe. There's margin to be had. Let's take some. Let's reward the futures market for good behavior. In corn, we're kind of in a holding pattern to see if this input market can give us a chance to do the same.
On just that note, is that what we saw at the close of here December 5th on Friday? Some red across the board. Is that just some profit taking? Folks rewarding the market a little bit?
Yeah, today's market action is pretty interesting. The Chinese have actually been buying soybeans regularly this week. I mean, anywhere from 5 to 15 boats have traded. The Chinese government has been the buyer. We've seen soybean futures react kind of in the opposite way. I would maybe chalk things up today to more pre-report positioning. I think traders might expect a lower bean export number in next Tuesday's WASDE report. Maybe taking some chips off the table. Soybean longs have made $1 to $1.50 here in the last few months. We know the funds have been buyers. Perhaps they're just going into the weekend feeling good about themselves, taking some chips off the table, like we said, and kind of waiting to see what happens in the report. But I do not think it was a big, hey, the farmer's selling kind of sell off in the prices. I probably has more to do with the report.
Reese, it is a Friday, so want to make sure you have time to get into the weekend. But before we do so, you guys are with the Ground Level Dispatch. You do a 2 times a day commentary on what's going on. Tell us a little bit about that.
Yeah. So we put out grain commentary twice a day, once early in the morning, once kind of later in the afternoon. Try to keep it short and sweet, 3 to 5 minute read, and talk about what's most important to the farmer, give them the good information, and then let them go about their day. So,
the reason I bring that up is because in the description below, we're going to have a link to a month free trial for the Ground Level Dispatch. If folks click that, they'll get access to what you just described.
Yeah, yep, you bet. We'd love to have you give us a try.
Reese Drenth is with the Ground Level Dispatch. Reese, thank you so much for joining us on Farm Your Daily.
You bet.
This is Farm Your Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community. So please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll be back again on Monday. Have a good weekend, everybody.